Good morning, everyone. Welcome to the 2023 April Spring Meetings Governor Talk Series. I'm Krishna Srinivasan, head of the Asia Pacific Department of the IMF. I'm pleased to welcome Governor Felipe Medalla of the Bangko Sentral on Pilipinas. He will be talking about monetary policy in the context of sticky inflation. Now, what we see in Asia is that headline inflation is coming down, but core inflation is pretty sticky. And there are forces at play which are likely to keep core inflation quite sticky. In that context, how should central banks respond? What we've seen in Asia is that central banks have tightened, but the tightening cycle has been pretty shallow, except in the case of Philippines, where the central bank has tightened monetary policy by 425 basis points, similar to what the Fed has done. So the question is, where do we go from here? With that introduction, let me hand over the floor to Governor.
Well,
Remarks.
Well, first of all, thank you for inviting me, and it's a privilege to be here as a representative of Asia's governors. Although, as you said, Philippines is quite different from the rest of Asia. I'd first like to qualify what's meant by sticky. Sticky inflation really is a lot of shocks. It's like the old wrestling days where the tag team. When one guy gets tired beating the other guy, his partner comes in and replaces him, right? And in this case, it's really a tag team. You had the Ukraine war, and then later on, a lot of agricultural shocks. It started with sugar, then later on vegetables, meat, fruits, partly because of very protectionist, well, of course, farmers are poor, they're poor. Lots of restrictions on imports. And there was a delay in issuing import permits. So when you look at this, what happened was, if you look at the 12 months starting from March last year to February, only 1 month was the month-on-month inflation lower than 4 divided by 12. Well, 4 is the high end of our target because of all those shocks coming together. Now, of course, clearly, when you have high inflation because of all the supply shocks, this will eventually travel to the service sectors because if food is expensive, you have to pay higher wages. If fuel is expensive, you have to pay higher wages. So with the lag, the service sector, with a 6-month lag, the service sector inflation went up as well. Now, we decided to use all our possible weapons. One was we let the market move the exchange rate, which is the textbook. The other one is we raise policy rate, which again is the textbook. The other one is we thought that we have to intervene because the exchange rate was moving too much because of U.S. monetary policy. So what happened was we ended up increasing policy rates from 200 to 625. But this exaggerates the movement because the 200 was quite abnormal to begin with. Because the normal policy rate in the Philippines is more like 3.5. But because of the COVID, we brought it down to 200. And in addition, we purchased our balance sheet increased by nearly 20% because we purchased a lot of government securities. Because of COVID, people were fleeing to cash, selling bonds. We didn't like bond prices to fall too much.
Right.
So we bought bonds. So this is the context that you're in. So we ended up intervening quite a bit. I will not say when and how much. We used to call it foreign exchange participation. After a time, we were ashamed to use the word participation because it was really intervention. But it worked. Okay, so with the high policy rates from January to October last year, the peso depreciated by 13% to the US dollar. By October, because of the policy rate increases, it appreciated. So from 50 to 50, nearly 58, down back to 55. And the last two prints for inflation are actually quite encouraging. the March price index is actually slightly lower than the January price index. Of course, with seasonal adjustment, they're just about the same. So technically, we have zero inflation for 2 months. But as you know, year on year is the sum of 12 month on month divided by 12. The last two are good, but the first 10 were terrible. And if we have more of this, we should be back to below 4% by November, December last year. Now, the question that I've often asked is, why was the high policy rates not a cause of worry for financial stability? Because as you know, if interest rates rise, bond prices fall, and the holders of the bonds will take a loss.
Sure.
But in our case, because to begin with, we were starting from 2 or even 3.5 if we take a normal view. Unlike the US and Europe and Japan are starting at 0. And therefore, the loss in bond prices is much higher. And also, our more typical issue is 5 years and 10 years. So the loss in value due to change in interest rate is smaller. Like in the US, it is 30-year bonds. And the other thing is our regulation of banks. We have capital adequacy ratios. We have liquidity coverage ratios. We have net stable funding ratios. So the banks, by and large, have very strong balance sheets. And also, I forgot to tell, with me is a monetary board member, Tony Abacan, who used to be president of the biggest bank in the Philippines, Metro Bank. And our banks, they're run by people who have a very long memory of 1997. So they hate mismatches.
Right.
So even with us telling them. So all of this, we were able to raise policy rates. The banks took a loss in their holdings of government securities, but the profits increased because of the higher lending rate. So by and large, the banks are very stable. So I think in summary, if you use all your weapons, your primary weapon for inflation can be used to their full potential, and because the primary weapon is still interest rates, but this must be supported by good prudential regulation, and buffers, because foreign exchange markets can go crazy, and then the currency issue of the world is driven by what happens to Iowa, and very domestic concerns. Clearly, the policy rates in the U.S., they don't care what happens to the world in general, and they're very targeted to happen in the U.S. You have to be ready, and therefore having buffers is very important.
So if I understand you right, you're saying that the financial stability risk, you're less concerned about that right now compared to other countries in the region? Or you said that banks have already taken the loss on this, right?
Yes.
So you're less concerned about the financial stability risk?
Right.
So in that sense, you don't see a trade-off between financial stability and inflation in the case of Philippines. Is that a correct reading?
Yes.
Okay.
And, well, of course, I'm old enough to remember LIBOR going 20%, but we're nowhere near that. Okay, there was with Volcker, the inflation was so high. He raised interest rates, and effectively, many countries started changing not monetary policy, but presidents. You know? And the impact on the world was so huge. You know, I cannot forget the picture of Mr. Kamdesu looking like this down at the president of Indonesia as they signed the agreements. So that's the other difference. The central bankers in Asia, they do remember 1997. And also the regulators do remember 1997. And now regulations are therefore
Feel less concerned.
Less concerned.
So assuming that the tightening cycle is coming to an end, I mean, given the fact that inflation, you said, last 2 months is coming down and so on, what role does communication play here?
Well, it's very important that the public knows why the central bank is doing what it's doing. And therefore, people say, well, of course, interest rates have to be high because the inflation has to be controlled. And also people have to understand that some degree of exchange rate volatility is actually quite useful. And that they trust in the central bank enough to know when it's too much. So, and then of course they realize that it's the fiscal authorities themselves must be doing the jobs, that the risk that the perception of risk that the Philippines will default is quite low. Because I'm old enough to remember when the spread was 600. Imagine the U.S. Treasury is the U.S. Treasury is 600, and when we borrow abroad, we pay 600 plus 600.
Yes, true.
So these are the other things that people must remember, that it's very important to have your macroeconomic and monetary policy to be very prudent and test and follow actually time-tested policies.
So in the context of inflation being very high for 8 months in the last 10 months, you said, what role has fiscal policy played in trying to protect the poor from the impact of inflation? You touched upon it a little bit now, but do you want to elaborate on that?
Okay, two things. We actually have a conditional cash transfers for families with young children to make sure that they will be kept in school.
Mm-hmm.
We call it 4Ps, Pantawid Pamilya, which is bridges for families. Mm-hmm. Okay, so, and we also now, during the pandemic, we had the registry of people who in need, and they were given cash because the lockdowns prevented them from working. Okay, and of course the problem was tax collections were down, and expenses are up. So fortunately, the perception of risk that the Philippines will default seems not to have changed, despite the fact that our deficit to GDP ratio has gone from 3% to 9%. And I give credit to our Secretary of Finance, our Ministry of Finance, because they actually publicly announced that the goal is to bring it down back to 3 by the end of the current president. So the government must actually show that it is behaving responsibly, and that the central bank is regulating banks without any political intervention, and that it's a truly committed inflation targeting central bank.
Right. So in some sense, the fiscal support you provided was very much targeted to people who are hit hardest by inflation. So was it?
And by the virus.
Uh-huh.
Because remember, a lot of people couldn't work because they were not allowed to leave their houses, or at least their neighborhoods. So, and then many of them have very little savings. So, and it may look small, but it could be, let's say, 5,000 pesos, which is what? Divided by the exchange rate, $100. But that's the difference between them going hungry and not going hungry.
Mm-hmm. Again, talking about one issue which has come up in the context of our engagements with countries in the region, they've all talked about coordination between the central bank and the fiscal authority, in the context of the pandemic and the various shocks we've had. So, was there any explicit coordination framework you had?
But that's a good question. The first thing we did was lend 600 billion pesos interest-free to government.
Mm-hmm.
By the way, it required an act of Congress. That's why it's so transparent. In other words, you don't like a few people telling the central bank what to do. It has to be the entire Congress. 600 billion, so that's so 600. That's divided by 650. Okay, so $10 billion, $10 billion, right? Mm-hmm. By the way, they paid it back already.
They've already paid it back.
Yeah, and then the other thing we did was, as people were panicking, fleeing to cash. By the way, the importance of being a good inflation targeting central bank is they're fleeing to pesos, not to dollars.
Mm.
And the central
What explains that?
Because they believe that the central bank is doing its best to meet the target of 2 to 4%. And then when we do miss the target, it's due to supply shocks, not to excessive monetary creation, not to excessive fiscal deficits.
And did you actually go out and communicate that to the public at large?
Yes, yes.
Why do we have this inflation? Is it?
Yeah, and of course they know. They know that the price of oil has increased right after the war. They know that flour became more expensive. By the way, the joke is the price of bread did not go up, but the bread became smaller. So when it goes from here, the pan de sal really means bread with salt, right? It goes from here to here, right? The price is the same. So they know that. And I think they also know that when they are being gouged, where there are monopolies, and indeed, where there are monopolies, the prices are regulated. By the way, that explains later why sometimes inflation is a lag. Because it could take 6 months before the regulator will accept the adjustment for water and electricity.
Right.
So right after all the forces of inflation seem to have gone, another 6 months, oil and water goes up. So, but then people know that they are regulated, and I think the regulators have done a relatively credible job of balancing between keeping the firms healthy and protecting the public.
So you've done monetary policy tightening. You've intervened to make sure that the exchange rate works towards addressing inflation. You also had a good coordination framework with the fiscal.
Yeah, and we actually did help them, right? Because otherwise, bond spreads would have risen.
Right.
If they had to borrow 600 billion pesos additional, bond yields would have risen. And if we had not bought 1 trillion pesos of bonds, bond yields would have risen. But it's not habit forming. Okay, the last thing you want is they want more next time.
Right. How do you protect against that?
Well, I think the fact that, well, you're really unique. The independence of the central bank actually is in the Constitution. By the way, something harder is to make the planning agency independent like the central bank. That's why they're unable to pass a law creating an independent planning agency, because it's almost a contradiction that that planning agency is equally loyal to Congress and the president. They haven't solved that yet. But carving out an independent central bank is easily doable because we have just 3 pillars: price stability, banking stability, and an efficient and safe payment system. So that's the advantage of central bankers. Their job can be carved out. And all that the politicians have to do is observe them, and if they notice that they're doing their jobs, let them be. And so far, I owe it to my predecessors that they've done a good job. And the public seems to understand that. Short survey shows that the level of trust is very high. And we are able to answer the problem of in particular, the huge turnaround in U.S. monetary policy from very, very low to very, very, in other words, imagine 4 75s in a row. And therefore, we had to respond.
Right. So inflation is coming down.
Yes.
You're not so worried about financial stability because you think banks have already taken the loss. So what keeps you awake at night? As
a large conglomerate fails because they're so large, and because of single borrower's limits, they're probably borrowing from 20 banks. Now, it turns out, in our own exercise, one large conglomerate is not enough to bring down the system. But we're not sure if 3. Now, it's both a good thing and a bad thing that they're very stable. It's good for financial stability. It's bad because that means there's not enough competition, right? Because the conglomerates have particular advantages.
Right.
So sometimes that's the complaint that when GDP goes up, the typical person doesn't feel it. So that's always a very common complaint, not just in the Philippines, I think. why you see that the GDP, I often, when people learn that I'm a central bank governor, they ask me, oh, our economy grew by 7.5%, but I didn't feel it. Maybe two out of three people I talk to think that way, and I think they're right?
And what's your response?
Pray for better things, you know? But also that, look, the grass is always greener on the other side. That be thankful that in many ways, the Philippine bureaucracy, the central bank, and politicians are far from perfect, but they by and large have done their jobs.
So, Governor, I'm going to just change topics to a different one here. So, Philippines does use a lot of capacity development support from the fund.
Yes.
So, how do you see the role of the fund in this area, in monetary policy, financial stability? What role has the fund played? What role can it play going forward?
Well, the last thing a central bank wants to do is reinvent the wheel. So we ask, what's the other central banks doing? Like, how do you make monetary policy more effective? And we started out with just a simple policy rate. We ended up with a corridor, which is the policy rate plus 50 basis points equals the overnight lending rate.
Right.
And the policy rate minus 50 is the standing deposit rate. And the advice on the size of the auctions. So I think the fact that the IMF has seen other central banks. Well, of course, we do get advice as well from BIS, and sometimes the advice is not the same, right? I think the BIS a lot more approving of FXI, and I think the IMF is moving towards that.
We have the integrated policy framework, which provides a framework to think about that.
Yeah. So sometimes you do learn from us, and we learn from you. Okay?
Absolutely, that's what it should be.
Yeah. So in that sense, I think the design of the tools, the operations, because since the Philippine Central Bank has not done it before, but eventually has to do it, the question is, how did other countries do it? What were the tools? What were exact instruments? For instance, a policy rate is not a real market rate because we ration the overnight when there's too much demand.
Right.
So you have to make a transition to a true auction. Again, the advice from IMF, what happens to countries where initially the policy rate is not a market rate, but eventually became based on an auction? What should the size of the auctions be, and so on and so forth? Because you have seen how the other central banks have done it, and when it's working and when it's not.
Yeah.
And clearly, the advice that IMF has given to us has been very, very useful.
And how much of peer-to-peer learning is there in the region?
We compare notes.
You compare, okay.
I remember. I think I can say. I will not say his country. He said, "Be careful of the use of temporary tax cuts because we temporarily cut our VAT by 3%, and after 30 years, the temporary cut's still there."
Yeah.
So
you compare notes frequently.
Compare notes. So we learn from each other. No, don't cut your taxes unless you really mean to cut it. Temporary tax cuts for temporary relief often end in disasters. By the way, some of the lessons are negative, like Malaysia and Indonesia subsidize fuel heavily.
Right.
And maybe they end up spending more on the subsidy of fuel than on education. And when you look at who benefits, that's the top 25%.
Right.
So some of the lessons are negative. Don't do this.
Don't do, yeah, sure.
By the way, they themselves tell us, don't do it. They said, the moment you do it, you cannot undo it.
Undo it, that's true.
So that's the kind of.
And we've seen that in many countries. So.
And this is the thing, though, about especially ASEAN central banks. We see each other a lot. We compare notes, and we learn from each other.
That's great. At this point, I'm going to open up the floor for questions. Yes, please. Do we have mics here? Yeah, this side.
Thank you. My name is Hamza. I'm with the IMF. Central bankers were really convinced that this inflation was transitory, right, a couple of years ago. If you knew back at the time that this inflation is going to be as sticky as it is, would your response be somewhat different?
No, because we got no choice but to respond to U.S. policy. I mean, if they, because initially we thought that a narrowing of interest rate differentials would not be such a large impact. But when the U.S. did several 75s, and it became very clear the peso would depreciate more than is acceptable unless we increase the policy rates. We wish that the U.S. will be more caring about international conditions when they change policy rates. By the way, we had the opposite problem when it did QE. The peso was threatening to cross 40 and become 35. And we were told a lot of firms that engage in tradables may go bankrupt or we have to lay off. So we had to intervene heavily. So the lesson is accept that the international financial system will be driven largely by U.S. domestic concerns and be ready for it. And the lesson is have large reserves. Of course, it's quite costly because we're borrowing money, and our reserves are earning less than the cost of the bonds that the Philippine government floats. Our 10-year now is what, around 5%, but we invest our money in very liquid US government securities and get 3%. So reserves are quite costly. But I think they're worth the cost. Of course, we wish there were a global system. We wish that Keynes won the debate in Bretton Woods instead of what, Mr. White. That the global system was a basket of all the important currencies. But if I were an American, I would like what happened, right? It's nice to be at the center of the global financial system. So then, in other words, accept reality. And the nice thing about it is, although people make mistakes, we know that they are mistakes. But by and large, we can predict what the Fed will do, and therefore react in a timely manner. Of course, when surprises happen, that's when your buffers help.
Any other questions from the floor? Somebody from the front here? Yes.
Thank you. I was going to ask about the informal market. How does that come into play in your fight against inflation? Thank you.
Sorry, we couldn't hear the question properly.
So the informal sector of the economy.
Informal sector.
Yes.
Informal, yeah.
How does that come into play in your fight against inflation?
Okay. When you're paying 36%, 400 basis points by the central bank matter very little. That's both sad and good, because that means they're so excluded from the system that what happens to the formal system hardly affects them. And that's negative because the incomes in the formal system are higher. But at the same time, the economy is a lot more stable because the informal sector doesn't need much inputs from abroad. So that comes at the cost of lower incomes, because the incomes in the informal sector are less than half in the formal sector. And plus the fact that they don't have medical insurance, okay, and all those things. So in a sense, having a large informal sector is a source of stability. Indeed, employment sometimes goes up during hard times because more members of the family have to work because of hard times. When the father of a family who works in the formal sector gets laid off, his wife and his son may have to work to replace his income. So sometimes you see, that's why we don't look, the overall employment numbers are very hard to interpret.
True.
Sometimes the employment numbers go up when times are bad. But because you will see, by the way, one statistic that I don't like very much is unpaid family workers. Meaning the business and the family is a one single unit. But workers are the family members. They don't get paid, they get fed. So clearly that system is very stable. No way to go bankrupt, right?
Mm-hmm.
But at the same time, you can clearly see that income levels are very low. And you can also, unfortunately, with very protectionist monetary policy, you can also see a very high level of stunting of children from poor families. So so the day they're born, they're already behind. In fact, 9 months before they were born, they're already behind because the mother is also not well fed. So these are the things that should keep us awake at night. But at the same time, it is very hard to change. And fortunately, there are programs that were inspired by the World Bank that help, like the conditional cash transfer.
Right, you mentioned that, talk about that.
Programs. By the way, it had one unintended effect, which was very good. The supporters of the rebel groups keep telling people the government doesn't care about you. Then they see families receiving money from the government just for keeping their kids in school. It was shown that that's a lie. Of course, so politicians are not perfect, but they see this. And then the program was made the national program so that local politicians cannot use it to buy votes. Okay, that's one nice thing. I think that program was with great advice from the World Bank and then later on the ADB.
Okay.
So the thing to do is, there are many things that the government can do, but really, since its ability to collect taxes is very low because a lot of businesses don't have formal books, its ability to help the people also has to be very, very well calculated.
I think we run out of time here, right? So thank you, Governor Medalla, for sharing your wisdom with us. Look forward to continued strengthening our relationship between Philippines and the IMF. Thank you.
Well, thank you very much, and thank you very much for having me.
Thank you.